everyone, K Kim here with the Traders Club. Welcome to the market update. Today is October 27th, 2017, Friday. Thanks for tuning in. I know I've been gone for 2 weeks. I was traveling and I am back in town. And so market is still doing what it's supposed to do in an uptrend. And I think last market update we talked about paying attention to, if you guys remember, to this channel resistance, right? The top of the channel resistance that I believe, I talked about how I believe that this channel resistance is going to be an important level. Also, we talked about that as long as it stays above 10 EMA and 20 EMA, monetary term sentiment is bullish. So what really happened was there's some volatility here. But once it lost 10 EMA, it came down to 20 EMA, which is coincident with the channel resistance. That's where we found support there. So you can see 10, 20, 10 is here, 20 is here, 50 is here, 100 is here, 200 is there. So this is how you're going to look at the market. As of today, as long as we stay above 10 and 20, which is this moving average, that moving average, benefit of the Dow goes to buyers in the minor term. As long as we stay above the 50 EMA, benefit of the Dow goes to buyers in the intermediate term, 50 and 100. As long as we stay above 200 SMA, obviously benefit of the Dow goes to buyers in a primary term. So as you can see, ever since we broke out of this level right here, 20 EMA has been that star, just promoting the bulls here, completely backing them up. Every time when it hits 20 EMA, we see strong bounce. And so, you know, that's kind of what we saw here. So we are continuing to see higher lows and higher highs. My first target was 255, which we've been talking about quite some time. We hit that. My next target is 260. I continue to think that, you know, we are dealing with the extended market right now. On the weekly chart, on the monthly chart, S&P 500 is extended. That does not mean it cannot go higher. And I think because we had a pretty impressive move since early August, since about here when it hit 100 SMA and bounced, and especially there was a level that coincided with that rising channel support. We had a pretty good move. How much move was that from here to today? That's a pretty about 6.5% move we saw since August, and you know, pretty parabolic move. I'm not sure if we're gonna see another move like that. What I think we're going to see is kind of a grindy move, and I think the volatility could be showing up here in November. That does not mean that we're going to see like 5% correction. It means that it could go up, it could come down, it could go up. We could see some, you know, gap up, gap down, intraday volatility. I think in a longer term perspective, we're going to continue to move higher. But I think we're going to start to see some volatility showing up in the market. And when the volatility hits the market, I really think that this channel resistance is going to be an important level where this could come and hit it, kind of consolidate before going to maybe 265, 260-ish, right? I think the worst case scenario, if we do come down and we lose that level, possibly watch that 100 or 50 and the 100. You know, possibly for support. So those are the levels to watch, but you know, I don't want to get too ahead of myself. But right now we are staying above 10 EMA, so let's continue to give benefit of doubt to the buyers in the minor term. We'll follow up next week and see how it plays out. But it's a great looking chart here. 10 EMA, 20 EMA. You know, this is when things starting to, you know, when the market starts to really respect these minor term moving averages. This when things to be looking very good for the bulls, where it seems like, you know, there's no way this market could come down. But this is where, though, I would feel a little bit, I wouldn't be too cocky about it, because we had about 6.5% move since August, since late mid-August or so. And so I think this is where we could see some volatility. Definitely, this is not a level to start chasing this. Obviously, this is a level that you want to start unloading your positions, which I've been doing. I've been, you know, obviously, you know, you guys know that I've been buying calls on this dips, and as the market starts to move here, I actually been closing out unloading some of my calls on Spider. Also, you know, I've been documenting in my journal posts and the articles that I've been unloading my, I actually still hold a lot of IWM. Let's actually go look at IWM. I actually closed 1/3 Still holding sizable position on IWM, the 1/3 on this gap up. I just kind of didn't like that gap up. It was kind of weak gap up, so I close 1/3 there, but I'm still holding sizable position. You can see 20 MA active support, and I talked about how this thing, if it falls back to 145, 144, somewhere in that vicinity, I was willing to buy some more. Well, it looks like it's not falling. It looks like 20 MA. We saw some dip buyers are coming in. We, brought up. You can see how price gotten back above the 20. See, the intraday gotten below it. Dip buyers came in, brought it right back above the 20. This is why that 10-20 is very, very important. And so, because this was that bull flag. It was like a textbook bull flag, and you saw that gap. I think a lot of people are chasing it up here. And then when this thing started falling, those short-term traders who chased that gap up, they start exiting, right? They're like emotionally exiting. And then sure enough, when they exit, this thing gets right back up. So short-term trading, if you're one of those people just sick and tired of it, I really recommend you to do much of a longer trading, a longer term. You know what I mean? Don't buy like these weeklies or monthlies. Buy leaps. They're a little bit more expensive, but you would have a higher probability in your, you would have a higher win rate just looking at things more of a big picture rather than trying to like just time these little blips and little pullbacks and little gap ups, right? So obviously, you guys know that I've been documenting on my journal posts. I've been accumulating calls here, and then bought that dip also, and then I closed 1/3. And I will be unloading maybe another 1/3 or so at 155. I am completely out of my 2018 January calls. I'm currently holding a lot of 2019 calls, and I think some 2018 September calls that I'll be holding through here. And my next target 162. I think looking at my longer term picture though. Like a weekly chart is extended on IWM. Monthly chart is also extended. So, but it could grind higher. So trend is up. So I want to continue to give benefit of doubt to the buyers in the minor, intermediate term, and primary term. Nasdaq Qs. This is what we talked about here. We, this falling or the rising wedge. People always talk about that as a bearish setup. That's what they said in a textbook. But sometimes you see how it could break out to the upside. So that's why you always want to give benefit of the doubt when we're in an uptrend, even with the potentially quote-unquote bearish pattern. So I mean, with the good earnings with Amazon, Google, and with Intel today and last night, it's just Qs really jumped up here, gotten above. I was actually wanted to see Qs fall and possibly 200 SMA and buying the dip, but this thing got up here. We got a gap up here, so it looks like a good looking gap up. It is. We're still dealing with the extended sentiment on the monthly and weekly, but look at this thing. It just keeps on going higher. You see that? This is where just so many bears are irritated because it's just keeps on going higher. It keeps on going. You thought this was a level they were going to correct. It didn't. You thought this was a level it was going to correct. It didn't. Thought this was a level. It didn't. Thought this was a a bearish wedge or rising wedge, which is bearish, but didn't. It just keeps on going. This is why you want to always give benefit of the doubt to the buyers when you're in an uptrend and you're on a trade based on that direction. But obviously, am I going to go long here on Qs? No, I'm not going to go long Qs. Again, like I said, this is not a level start chasing these indices. This is a level you want to start, if you've been accumulating positions in early part of this year, you want to start unloading some of those positions that you've been accumulating earlier this part of the year. And that's kind of what I've been doing last several weeks here. Financial sector also doing well. Talked about how this was a head and shoulder pattern that never played out, and then continued higher, came down, but we're still on an uptrend. V-shape higher, we're back up here. So bullish, looking good here. Monthly chart looks good. Weekly chart looks good. We are extended on the weekly. I don't see too much move coming from here. Probably some consolidation, possibly a pullback. If it actually pulls back to about 25-ish, this is definitely a good level to buy the dip, but I'm guessing it might not give you that and keeps on grinding higher. It seems like that's the theme of this market lately, is it never give you proper pullback to you know what I mean, like to able to give you some good dip to buy. And then when you do see a proper pullback like this, it seems like everybody's freaking out, scared to buy that dip, and then a lot of times the majority of people just kind of miss out on a move, right? So But XLF still holding on again. 10 and 20 MA. That's what it's been doing, right? We lose 10 and then 20 is right there. We lose 10, 20 is right there. So it's continuing to act as support. How long is going to continue? I don't know. Nobody knows. But as long as we stay above 10 and 20, benefit of that goes to buyers in the minor term. If he pulls back to 50, then that's potentially a good level for a support there. Let me go through this rather quickly here. Apple. I've been talking about weekly bearish divergence, but with the recent gap move here, actually the sentiment is starting to change. The weekly bearish divergence is starting to weaken on Apple here. I still don't like to buy it up here. I'm still gonna not touch Apple until we see steeper correction. If it does continue to move higher, I'm okay with that. But right now, this is becoming, this right there, this is an island bottom, right? So we got the gap down, gap up, and then now we're reaching for a new all-time high here. The weekly bearish divergence on Apple is slowing down a little bit. You can see right there as MACD is trying to get back up, and RSI is trying to get back up here. This formation is still there though, but it's starting to really grind here. So I'm not, at this point, this definitely still, for me, not a level to start going long or on a breakout, anything like that, until I see more consolidation or correction. But this is, I think, level that if you're long, you know, with calls, maybe, you know, with shares, maybe continue to ride that. But I think this is a level, as it continue to move higher, I think this is a level start to unload some of the positions, because, you know, when we go to monthly chart on Apple, can see right there, we're still holding that level. And again, you know, in this time, maybe we'll break out. This time we may break out and then pull back and then go higher. Or possibly a pullback, but we'll see how that plays out. Kind of at least this is not a level for me to engage on Apple there. Tesla is seeing much more weakness here. We do have a bearish divergence on weekly chart on Tesla. It's a weaker than, is not potent though, but we're right. We did break slightly below this. You know what? Let me just adjust that. Let's just do this. Let's do right there. So we are still holding that neckline, resistance, support. You know, we are coinciding with that 200 SMA. You know, potentially some kind of consolidation or possibly topping pattern. I think we have earnings coming up soon here, right? So if you see a gap down on earnings, then I think 270-ish level is a level to look for, possibly see a potentially big support there. Let's look at Netflix. Netflix still moving here. Look, monthly chart looks like definitely is soaring, right? But this definitely not a level for me to start. I'm not calling top here because it could very well continue higher, because remember, even right on this day, right there, that hit that overbought sentiment on the monthly chart, but it went up 1, 2, 3, 4, 5, 6. It grinded higher 7 more months before finally correcting. So we've been kind of an overbought sentiment for about 5 months or so. So it could grind higher for a few more months. It's just, this is not a level I want to start starting a new fresh position. Facebook continues to move higher. Same story on Facebook here. It's look at this on this monthly chart again. It's we haven't even came down. We're just pretty much stayed all the way up here. I do think sooner or later this thing is gonna see a steep correction. But until then, I mean, you know, the shareholders and people are playing this. You know, if you're able to make profits on Facebook, then that's great. But obviously, for me, this is not a level for me to start chasing it up here. Amazon had a great move. Actually, Amazon looked like it was doing some kind of head and shoulder formation. I bet a lot of people are looking at that, and a lot of people are probably talking about it. But with the huge earnings reaction, pretty much completely nullified it. It's a new all-time high, you know, On the weekly chart, Amazon actually, it's interesting to note that Amazon actually has a lot of room to move on the weekly. Look at this on the weekly. Look at that stochastic. It's making all-time high, but stochastic on the weekly, we're just coming out of oversold condition. Can you believe that? It's very, very similar sentiment as here and here. Isn't it interesting? We're at all-time, we're breaching all-time. We have made new all-time high, and stochastic is just near oversold area. That means we have that much room to move if this thing does continue higher. So there's a room to move there on Netflix. One last one, Google, and I'll let you guys go. Google also had a good earnings, just popped here and faded a little bit, but that's the level. And let me see here, monthly chart extended. Looks like weekly also have room to move here. Let's right there, Google. You can see these are overbought. And this is oversold. You can see we got a bit of more. This is a weekly chart, guys. So there's some room to move on that stochastic. We're just retesting the 20 on that weekly chart. So looks like a good move there. Let's talk about Intel also. I forgot to talk about Intel. Intel obviously had a huge move. You know, Intel's been actually reporting good earnings. You know, because I've been tracking Intel, I've been long on Intel, I've been accumulating calls and shares in Intel all throughout 2017, so I know it. It's just that, you know, the investors were just really hesitant and fearful because, you know, Intel's obviously still in this range. It was before the breakout, it was still in the 17, 18 year range, right? Because of that, when we were reporting some good earnings in 2017, it really didn't see a lot of public participation. Finally, we see a breakout. You see that, right? You see that breakout of 17-year, and I think this thing is ready to make new all-time high. Remember what happened to Microsoft? Similar thing happened here. We consolidated for so long. We broke out of it, retested it, and then boom, right? Remember what happened to semiconductor, right? Consolidated it for 17 years, did nothing but sideways, broke out, retested, boom, right? So Intel looks like this is a stock that could make new all-time high. Probably not this year, next year, but it's just a good start. So obviously this is not a level to chase, but this is why I am all out of my calls. Actually, I did close out remainder of my calls today, but I'm holding all of my shares as of today, and I have actually pretty sizable shares on this, so I'm probably gonna hold that for a long time, at least 2-3 years on this. So Intel looking really good. Monthly chart looks good on the Intel. Just broken out of this 17-18 year range. Very solid looking chart here. Again, that doesn't mean it's going to go straight up, but sometimes it does. Sometimes pulls back to retest before going higher. Nobody knows how that's going to play out, but either way, if it pulls back, I'll buy more calls. I'll load up more shares before going higher. If it continues higher, I'll just keep holding my shares, and that's how I'm going to play it. So that's everything for me. Have a wonderful weekend, and we'll follow up next week, see how the market is doing, and good luck trading next week.